I see Greg coming down the line. Where's makeup? We are going to give us just one moment. Let Greg get set up here. I need to get the.
Do you want me to log in through my link?
No, we're going to do it right here. But if you can email me the deck. So I tell you what, give us 2 minutes, and we will come right back. Actually, I think I can send it.
Yeah, I'm finding everything but that.
I'll send it right now.
Long story short,
Volume is on.
Yep, 8 months. Oh. 8 months, yeah. First, yeah. Congratulations. Yeah, no, we were very excited.
Check that out.
Moved twice, moved 3 times.
All right, we've got the mobile studio working here.
Hello, everybody.
Hello. Want everyone to know, Allison Coughlin from the CME group just stopped in here to say hello. The meeting about the new futures contract is at 2:00 here, so in about half an hour or so. We will report back next week after we hear all the news of what to expect. So I can tell you the mood here at the Montreal Wood Convention is very enthusiastic. The number one, people are very excited to get together and see live faces. but the perspective of course, the last 2 years for the lumber industry has been really pretty good if you are a producer or distributor. I think everyone is cautiously optimistic moving forward. Oh, there you are, Greg. I'm going to share your screen. Oh, we need to mute your microphone. Let's try it now.
No? What's going on? Should it be a mic?
No, it could be your speakers too. You're probably hearing us. So take your speakers down to 0.
I got you. Okay. This should be off too.
Oh, I can mute you from here. There we go. Okay. Got it. Perfect.
Let me share this. Slide.
And for some reason, we're not seeing your screen. You need to share your screen. Okay, let's go. Let's go. And you go to the studio. And then it's down here, that button.
It's not.
Hit cancel. And then put that down.
Hey, Patrick.
How are you doing, Patrick?
Good to see you.
Good to see you.
Yep.
You want?
I feel like I know you.
Well, we're about to go live right now.
Greg.
Or I should say we are live.
Oh, hey, Patrick. How you doing, bud?
Good to meet you.
Good to meet you.
We'll see you guys later.
Please come back. So,
isn't this?
So go back to the studio, and it's the cancel, and that button right there. There you go. And then choose the entire screen. And it's not letting you. Try window.
Let's see if we. There we go. Let's see if that'll go.
Aha! Everybody, we are live. Fantastic.
Let's
and
go.
If you want to go big screen,
let's go. Let me put it in a slideshow from the beginning. There we go.
Let's do it. So, welcome everybody. Lumber Futures from the Free Seats. Mike Wisniewski with Materials Exchange. Greg Kuda, Westline Capital Management.
Hello, everybody.
Live from the Montreal Wood Convention. And let's get into it.
Let's get into it.
May 24th. What do we know?
Well, just a continuation of how we start off. And I apologize, I'm sweating here. I just ran over here. I think the big thing that stands out to me, Mike, is, and again, two big things. You have the continuation of the liquidation in equities. Obviously, blackline is lumber. I think the expectation was with May going off at 920, there would be some kind of a rally, and lumber has just done the opposite, where it continues to liquidate here, kind of, again, black line. You can see how it's kind of tracking more with equities. Crude continues to be a standalone. And the other big thing that jumps out, interest rates, the 10-year peaked out at 313 a week ago, and it's back into 273. So interest rates for the time being have stopped going higher. They've gone more sideways than anything else.
Well, I think the market is saying that, this is going to work, Fed. You've raised interest rates. You're going to effectively slow things down, and you probably don't need to jack the rates anymore.
Well, I think we'll flip. So I thought this was something that was pretty amazing. If you would have, the last official bear market for equities was back in 2009. And so what you're looking at here, we'll just pick NASDAQ Composite, the one highlighted in black right here.
This one?
So you're down 29.3% from the high water mark. Yeah, right there. But amazingly, you're still doing okay. If you bought back in 2009, you're still up 785%.
Well,
yeah,
that's not a bad return.
Yeah, that's not a bad return. Same thing with the S&P. Here's S&P. You're still up 476% from the low. So again, you're down 18.7% from the high we set at the beginning of this year. but you're still up 476%. And the laggard of the group here, the Dow, is down 15% from its high, but you're still amazingly up 377%.
What you're saying is, while there has been a pullback, there has not been a destruction of wealth.
No. And when you just look at, even if you want to go back to the kind of onset of the pandemic low, and you want to go back to when the low back in 2016, when Trump was elected, you haven't even had a 38% retracement correction. 62% would put the S&P down into that 36 to 3,400 area.
Right.
And in the grand scheme of things, when you look at a continuation chart, weekly, monthly, you would still be in an uptrending. This is just viewed as a healthy correction. So pump the brakes. Corrections are good. It's just that there are, amazingly, there are certain segments out there. There are certain generations, amazingly enough, that have never gone through a bear market in anything.
Yeah. I wish I was one of them.
Yeah, right.
On two fronts, not going through a bear market, and I'd be much younger.
Yeah, right.
All right, so let's take what's
So
going on.
we'll just run through. So I thought this was another one. This is global
Inflation.
CPI. So you can see this is the UK, US, Eurozone, and Canada, and you've got varying degrees of inflation. Canada lagging behind, just under 7%. UK up at the 9% area. Eurozone. This is, I think when you look at Euro, you look at the UK because of what's going on in Russia. You're going to see these spike more dramatically up into this 9 to 10% area.
Much more directly affected.
Yeah. Yep.
All right.
So gasoline prices. This is this
is a real
scary.
deal.
Yeah. No, this is the real deal. Where you look at the blue line is retail price, the red line is futures price, and you can see that even when you adjust for you've taken out the highs back in 2008, 2007, 2009. So you're paying the highest prices at the pump on record.
And you know what I'm kind of finding so fascinating? We see these in gasoline prices, diesel prices high. People are saying, "Oh, this is going to mean trucking rates are going to stay elevated," and trucking rates are coming down.
Yeah.
Like, while it's an input cost, you still have a supply and demand on trucking. So just because you have high fuel costs doesn't mean your rates are going to increase. It just raises the floor that they can go down to.
Now, I think the other thing, to me, you intertwine lumber in with all these other markets. And the other big thing that stands out to me is that we're entering our traditional kickoff of the driving season in the United States, where everybody takes road trips Memorial Day weekend. It's going to be interesting to see, with crude prices still hanging dramatically higher, even along that inverted curve, at what point do you create demand destruction? And I have to think that's, it just, again, I don't know if you see the.
Well, I'm going to do my part for demand destruction. So I have two kids, and they're going to be gone at summer camp for 8 weeks this summer. While I have a small car that gets good gas mileage, I have a big SUV. When it's just my wife and I can guarantee you we are going to be in the small car.
Yeah.
Like if I need to go somewhere, I'm going to figure out a way to pile whatever I need into the small car, because, if I'm driving 100 miles, it could be round trip between the two that it could easily be $25. That's a case of good beer.
Yeah, no, I've got a 17-year-old and a 15-year-old, and my son has his license. My daughter's in the process of getting hers, so we're looking for cars, and that's the other thing that's astronomical. Used cars, go find a car. So it's not cheap.
Supply chain, what's this?
Yeah, so this is just a look at, this is from the Bureau of Labor Statistics. This is just a look at supply chain issues. And, there was this thought process that we were going to see this big correction here, improvement. But the actuality is it's hovering at historically bad levels, high watermark levels, and continues to show signs of getting worse, not better. And then when you dive kind of, what's the catalyst for global supply issues, you start to look at the big picture stuff out of China, and it's pretty amazing what they're doing with their zero tolerance and how the significant damage they're doing to their economy. mean, I don't know how well people can see this, but it just shows this is basically import-export levels, ISM manufacturing levels, China Purchasing Manager Index levels, and you've basically retraced or close to retracement of where they were when this all started in March, February of 2020, where it's this goes a long way in explaining why supply chain issues aren't improving, because China is in a disastrous level right now with their economy.
And it goes to show how global our world is.
Yeah.
We're globally connected. So we got a question which is going to be perfect for us to roll into basis charts. Amherst Mod Plant from Colorado. Should we delay any significant cash purchases? Well, let's take a look at where the cash market is compared to where the futures market is. That's, I mean, I think I know what the answer is.
We'll come back to these. So here's your continuation chart. Again, we thought that we left this gap at 920. Markets basically collapsing into this 650, sub 650 area. Go to a July chart. You can see that, the trend is your friend and the trend is still down here. So from a basis standpoint,
and of course, basis is nothing more than the difference between
cash minus
cash
futures.
prices and future prices. So
the answer is yes. You should be buying. You should be buying everything as far out on the forward curve and futures, and leaning out your cash purchases where just in time, whatever you need, you have to buy. You buy. You kick the can down the road for everything else. Now that is not necessarily the case with Southern Yellow Pine. You can look at certain items, certain species, but when it comes to Western SPF and you compare that Eastern Western SPF. And the mills aren't going to like this, but no, you should be buying. You should not avoid cash purchases. One of the big sawmills that's here, oddly enough, took their pricing on 2x4s yesterday to $840 ask. So you're starting to see the mills come off hard, and we thought that futures, well, that's a leading indicator. That's not now. Well, the actuality is futures is becoming more and more now from a cash standpoint, and I would expect that convergence to still come down until the mills can clean out, take big cash orders underneath the market, and then try to go off the market again. That's what you're ultimately setting up, but you're going to have to come down to futures type pricing, July, September, November type pricing, to incentivize, to entice people to come in and buy big blocks of cash.
Right. So right now, there's no inventory build. It is an inventory liquidation.
Yep.
Inventory builds are when the mills can actually extend order file. They can't do that. What happens is they have to come to the market, lower their price because of what the gentleman in Colorado should not build an inventory right now. He should buy as far forward an inventory of on-ground material.
Yeah, and I think the amazing thing, and I think we hit upon this last week, what I'm seeing some end user types do is that, look, we bought lumber for building 1, unit 2. We're going to use that existing lumber and just stretch it out for building 3, building 4. It's amazing in a falling market structure how you can lean out, even in a lean inventory environment, how you can lean out your usage.
Good.
You can lean out your consumption.
You want to get on live? We're very excited. The convention is just getting done with lunch, and they're coming back in and filling some of the booths. And we have some good friends next to us from Buchanan Lumber Sales. So, okay, let's take a look at some of the other statistics here.
So from a basis standpoint, cash is finally showing signs of collapsing into futures. Futures is still not showing signs of putting in a bottom. So it's that grind lower in futures, finally dragging cash down with it.
Now, we don't even have to take a look at September basis because it's the same as July.
Yeah. Amazingly, July SEP actually traded at a discount. So July went as low as $2 this week to September.
And this has been, the structure of the market has not been like this for at least 18 months.
You have to go back to the fall, yeah.
So what we're saying is the spread between September and July has collapsed to zero. They're the same price.
So that inverted bull market structure, you're reverting to a carry structure in the lumber spread. So that's an indication of what's to come or what's likely to come in physical cash. Your future structure is indicating going from a bull market structure to a bear market structure, going from an inverted structure to a cost of carry structure where cash is ultimately will become cheaper than futures at some point, and then you'll stair step up with that cost of carry in the board.
We had a comment about mill bank accounts are quite heavy. I think this could extend the lower prices that we will see, because it is true they are not in a pain point right now, and they
No,
will be able to run
and so the interesting thing, and I was talking to a sawmill earlier today about this. The sawmills that are pure dimension play type individuals are going to be much more sensitive to curtailments or trying to keep higher prices. Sawmills that you've got a log, 70% of that log goes to dimensional lumber, the other 30% goes toward you take the bark, you run your boilers on it, you take the remaining, it goes to pulp, it goes to pellets. You've got all these other byproducts where it's not that easy to just say shut down, because you've got diversification of that, how you consume that log. So I think areas that are more likely to see shutdowns will be your worst performing areas from an EBITDA standpoint, from a performance standpoint. So British Columbia, it's no secret that's where you're likely to see continued shutdowns.
We may be getting out in front of ourselves a little bit talking shutdowns still at this point.
Yeah.
So let's keep moving through. Let's take a look at some of the open interest.
I'm going to go back, Mike, real quick. There was a couple of so this is single family starts versus builder confidence, and it's pretty easy. Builder confidence typically is a leading indicator.
So the red dash
single
line
family
is the confidence level.
So you can see builder confidence still historically high, still at a phenomenally high level, but starting to trend down. And you can see starts the blue line. So it'll be interesting to see as this comes back down to reality, how quickly the single family component gets shut down. We all know that there's this big shift away from single to multi. How quickly does the single family component fall off a cliff? And I thought this was another great stat from NAHB. 30% of all single family home building permits in the U.S.
Texas and Florida.
Yeah, Texas and Florida. That's amazing.
Texas is a big state, but no doubt that's.
So these will be your canary in your coal mine type states to watch here. From when you look at housing starts, we look at the aggregate numbers. It's going to be important to start watching it on these leading states that comprise probably you take 3 or 4 other states, that's 70% of your starts.
Sure. So regionality can make a big difference.
Yeah. We'll jump to open interest. A week ago we were 2286. 2318. There's really nothing that jumps out from an open interest standpoint outside of we're just
what jumps
going sideways.
Here's what jumps out. We're going sideways.
Yeah, we're going sideways market.
There's always something in the data. The data here is telling us it's a pause.
Yeah. CFTC, there was some movement in the CFTC numbers. So here's the latest report from May 17th. And you had commercial short covering.
That could have been some deliveries too, though.
Could have been deliveries. It can also be with futures kind of falling ahead of physical cash. A lot of guys just taking the profits on the short side of futures and then just purging the cash.
Here's what jumps out at me there is the short money or managed money, short interest went up, and the long interest is nothing to speak of. So that tells me that when the market bounces, there's a lot of dry powder available for the managed money, the fast money guys to jump in.
Yeah. No, I think, again, this managed money component, the short selling, this is all momentum based. So as July was making lower lows, this is the crowd that will pile on. Needs the momentum to keep going lower. The second the market stalls out, that momentum stalls out.
They're out.
Yeah, this is likely going to be your last in, first out type crowd right here.
Perfect.
And I think that was it. I know we were going to do a consolidated version just because of the show.
So if anybody has a question they would like us to ask some of the mills, which we're already talking to all the mills, and asking them. We're talking to a lot of the distributors. I would say the overall theme here is very cautiously optimistic.
I think there's a big backlog of demand that still has to work its way through the pipeline. The big question is, how quickly does that new business looking forward start to slow down? Does it disappear? But overall, I think people are, this is the first time we're in Montreal since 2019. You haven't seen a lot of people here, and you haven't seen people in 2 to 3 years. So it's just nice to see people face to face.
There's one not new, but another underlying theme I keep hearing about, and it's logistics. And when we were running so full out and the markets were so much higher and there was the allocation kind of mentality, whatever logistics method you had, you just stuck with. But now that things are slowing up for them, I'm hearing people saying, well, we're going to try to put wood there. We're going to move wood through this channel.
Yeah.
Just searching for a different way to get the wood to market.
Yeah.
There is an opportunity there where if you can be flexible with your supplier, there's ways that you may see more product.
Yeah. And I think the other big takeaway is that there seems to be a build of reload wood, but I don't think that the spec wood to me still belongs in the sawmill's hands.
Correct.
Most of the wood out there that's in at the reload level in the secondaries is spoken for, where there's still this big backlog of business out there.
There's no basis trade opportunity. You're not going to fill up reloads with non-mill wood if you can't hedge it.
Right.
So, all right. Thanks, everyone, for being patient with us getting going today. Like I said, we have a meeting here in just maybe 15 minutes to find out from the CME group the structure of the new contract. We'll report that back next week. Tomorrow, Ashley Buckholt will be live from the show floor here. I'm guessing he's going to have a special guest because Greg Riley didn't quite make it out here. But so Greg and Matt Beamer will be from their home desks. And everyone, take care. Be safe. We'll see you next week.
Take care. Thanks a lot, everybody.